Welcome to Startup Simplified,
Yeah.
Fandy. How are you?
I'm good. Thanks for having me.
Likewise, pleasure, chief pleasure. So, thank you for being our first guest on this series about venture capitals. Right? We've been speaking to a lot of startup founders all this while, and that is when we realized that we should do a series about venture capital, because a lot of people actually don't either understand how venture capitals work, or they have a lot of misconceptions, right? There's a lot of confusion. So hence we thought that, okay, let's do a series around it.
Right.
And we wanted to chat with you, especially because you come right up there in the first part where founders are looking for their first check in most cases, or just after they have raised some money from their family or friends, and now they want more capital to grow, right? You're just out there. So we wanted to start this series with you, right? Before we get into any of this venture capital discussion, I would want our audience to understand who you are, what is your background. So if you want to give a brief introduction, that will be great.
Right. So I'm from Kopital Ventures. We're formerly called Kenangan Capital. This is our first external fund. We invest, and as you mentioned, we aim to be the first check into companies. Our check size ranges from like 25 to 300K. We don't have a minimum equity, but we typically don't take more than 15% equity. In fact, 10% equity. The reason here being that we believe the reason why we're investors and not founders is because at the end of the day, you still have to be the founders driving the company. Sure. And we're there to just support you guys. And for myself, previously I wasn't from the tech industry. I was in the traditional businesses, but then during COVID, everything slowed down. And I was very fortunate that I've been friends with Edward and James for a while. And at that time, Edward decided to actually start the angel investing, and I was telling Ed, hey, can I join? And he was gracious enough to let me be a part of it.
Sure.
And since him and James were still very much running the day-to-day operations of Kopi Kenangan,
sure,
I was the one running around and trying to deal source and be in charge of the day-to-days.
Sure.
And with their support, we were able to invest in some great founders who obviously make our track record looks pretty good on paper.
Okay.
And in the end, I fell in love with investments in the tech industry.
So it's been what, 3 years now?
It's been 3 years.
Okay. Okay. Just for the audience to get an understanding, Edward and James are founders of Kopi Kenangan.
Yes, Edward and James are founders of Kopi Kenangan.
Okay. Okay. And when you say your first fund, just give us an idea. What does that mean? So you have multiple funds which you invest in multiple startups.
So I'm not sure if we can consider our first fund a fund.
Okay.
But I mean, that's what I just said just now. But yeah, it's actually, the first fund is actually our personal capital.
Okay.
There were 9 of us, and we were just investing out of our own pockets.
This was in early 2020.
This was in mid to late 2020. Mid 2020 was when we started.
Oh, right in between of COVID.
Yeah.
Okay.
Obviously, the traditional industry slowed down a lot.
Correct.
That's what I thought with the emergence of Kenangan Fund, I thought it was a good avenue for me to actually enter the industry as well.
Sure.
And with guys like Ed and James supporting the fund, I thought there was no better opportunity out there, no better timing, and obviously them having built one of the more sustainable, high-growing company in the region,
Sure,
actually helps that, right?
Definitely.
Yeah.
So how many companies have you invested so far in?
as angel investors, we have invested in 30 plus companies.
Okay.
And right now, with our second fund, we hope to invest in 40 to 50 companies.
Okay. So your second fund is also again going to be personal money, or how?
So actually, this is our first external fund.
Okay.
We are also invested, but we have external LPs. And in fact, I think around a large chunk of it come from regional and global funds.
Okay.
That actually look at us as sort of a local partners, sort of a deal flow for them. These funds are bigger in size.
Sure.
Whereas we're quite small and we typically don't do follow-ons.
Sure. So these, when you say these funds are bigger in size, they are the ones who basically do Series B, Series C and all?
Yes, they're the ones that do Series A, Series B, Series C.
Okay.
The reason being, we hope that whoever we invested in, at least a portion of them can get carried through within the ecosystem and get investments later on.
Sure.
And so there's the continuation. The bigger funds can actually get to know these founders from the first day, which is what it's all about, right? Nobody is going to be a finished product on day one.
Absolutely.
So these funds, seeing these founders from day one, how they grow as people, how they grow as individuals, it will be quite, it will be great for them to see it.
Sure.
Yeah.
Okay, we will talk more about your LPs and the fund. Let's take an example of, let's say, one of these startups from your portfolio.
Yeah.
Run us through the whole process. Let's say, for example, just think of any one startup within your portfolio which you want to talk about. Start from when did they pitch you, what was the process, and where they are now, and what is your contribution to their growth today, for example.
Let's see.
Any startup, whichever you want to pick.
To be honest, I think our contribution is quite minimal.
No, it's okay. I mean, look, I am myself a startup founder.
Yeah.
Trust me, you might feel it is minimal,
Yeah.
but the founders feel it differently. Because what might be minimal to you might be pretty big to the founder at that time, at that point of time, right? So, I mean, yeah, it's okay.
Yes.
Don't be too humble.
I see.
Don't be too humble.
I mean, the process goes with, like, first I made the startup, and then I typically always ask for the decks, and then obviously I've taken down some notes from the call.
Sure.
And the investment committee basically consists of myself, James, Christian, and the fund manager. So whatever startup that we come across, it will immediately go to the investment committee.
Okay.
And if there's interest, we'll move forward. Probably have another call with another member of the investment committee. And then after that, we will obviously be able to make a decision. We're a very lean team.
Sure.
I'm usually the guy that takes the first call as well, because early stage, we believe that the decision has to be quick.
Correct.
We cannot give the founders any false hopes as well.
Sure.
We cannot lead the founders on, but we must always, I think it's quite important as an early stage investor. The first thing you ask yourself before you invest is, as you mentioned, how can you add value to these companies?
Correct.
Even if it's a good company and you feel you can't add value, is it fair to invest in the company, or is it better for you to actually introduce them to another early stage fund?
Sure.
To be invested by? Because at the end of the day, as investors, we get to invest in multiple companies.
Correct.
As a founder of a startup, you are
out there with one.
You're all in.
Correct.
All eggs in one basket.
Correct.
So I think you have to be kind of considerate about because the first investor sometimes can dictate where you go.
Sure.
That's why people always say that sometimes about the market size when you invest. Market size matters, but sometimes having the right partner from day one may lead you to a bigger market, may lead you to do bigger things, may lead you to obviously expand your horizon.
Sure.
And if you get the wrong partner, then
Well, yeah.
that might not be very good.
We have all heard and read stories of wrong partners. No, absolutely. Okay, so how long is typically a cycle from founders approaching to closing the investment? In your case,
Typically a month.
a month.
A month nowadays.
That's good.
If everyone is very bullish about the company, it takes a month.
Sure.
But obviously, if there's some, if one of us is more optimistic about the company and others not so much, then obviously it will take some time to convince the others to actually be on the same page.
Okay. Oh, if you're comfortable, can you share what kind of consensus internally it is required for you to invest? Like a majority type, something like that?
Obviously, on paper, it's a majority, but then it's always best to have everyone on board.
Absolutely.
And whenever, I think the thing with us is that there's mutual respect among one another.
Sure.
Even though consensus, even though we can make a decision with just majority, we always go back to the drawing board and ask ourselves why one of us is against it, and then we'd rather be more careful with the way we invest rather than becoming too aggressive.
Absolutely.
And since we, as mentioned, respect each other's, we always keep on discussing, bringing up the discussion again. Why is there a question mark regarding this company from your perspective? I think among all of us is that is what have kept us going in the short time we have been investing, is that we have always respected each other's opinion, each other's decision, and that's that trust and respect.
Interesting. You are in. You focus on any specific industry?
No, we are sector agnostic. Obviously, because of my partner's background, we have a sort of a
Love for F&B?
not for anything consumer.
Anything consumer?
Yeah.
Okay. Let's talk about a few companies in your portfolio.
Yeah.
Right. I would rather let you do that. I mean, pick up one or two from your portfolio, and you can basically run us through the earliest conversations. Right. And the idea over here is that I want any startup founder or anyone who's having an idea of a startup in Indonesia or in Southeast Asia who wants to do something in Indonesia, I want them to know how can they reach you, and once they reach you, what is the whole process like? What do they need to be prepared about, right? In terms of making sure that the conversation is relevant, right? So I mean, it's always best with the example. If you can share, let's say, one of the pitches by one of the portfolio companies of yours, which was like so damn on point that things just moved very quickly. Anything of that sort?
Right.
Can you share?
I think for me, actually, personally, if it's so damn on point, it's a red flag for me.
It's a red flag? Okay.
Yeah. If it's so damn on point, you shouldn't.
It shouldn't be a startup.
The reason why it's a startup is because
Uncertainty.
especially that early, there's a high chance of failure, there's uncertainty.
Correct.
And if you know the answers to every question, then am I really the right person for you? Probably not, because you're smarter than me. I mean, you, in general, founders have to be smarter than investors, but then, smarter in a way to run their business, more knowledgeable about the sector. But if you are just that know-it-all, then again, it goes back to what kind of value do I add, right? So the kind of founders that I've invested in that I like in the past, to be honest, this is not a politically correct answer, but I have no regrets investing in any of the founders that we invested in.
Sure.
Regardless of the outcome of the business. Because we would invest in all of them again in any other industry.
Sure.
Obviously, they have to learn about the industry first. But then,
Of course.
But then, of course, as early investors, I think the most important thing for us is their character, right? And their dedication and their humility. I mean, all those basic human qualities that just makes you a nice person to work with.
Okay. So that leads me to the question, right? Especially for this early stage investment.
Yeah.
Are the founders the most important criteria when you're making the investment?
Yeah.
Or it is like, I mean, I'm sure there must be some weightage, right? That, okay, X amount for founders, X amount for industry, X amount for, I don't know what, technology, I'm not sure. But are founders the most crucial ones in this place at this stage?
Definitely. A large chunk for us as founders. How many coffee shops, for example, are there in Indonesia? But I always tell founders how many coffee shops and how many unicorns are there
In coffee business,
in coffee business in Southeast Asia.
Correct.
There's only one so far.
Yeah.
But you put unicorn aside, how many coffee shop can challenge Starbucks in terms of the number of stores?
Correct.
I think there's only a few, right, that can say they have like a few hundred location and obviously one unicorn. So what's the difference between these coffee shops and other coffee shops? I think goes back to the top, right, which goes down as, right? Start from the leader, and the leader in those, and for example, Kenangan is of course Ed and James. And so founders is everything.
Sure.
And if we look at the startups, the more established startups, a lot of them have pivoted from their initial businesses.
Correct.
But then they were able to pivot into something successful.
I mean, we hear about the successful ones.
Yeah.
There are a lot of pivots which just pivot into closure. A lot of such pivots also happen.
Of course, but that's why.
I mean, that's the game. Yeah. I mean,
The difference at the end of the day is the founders.
Correct.
And the founders' ability to grow, the founders' ability to adapt. And I think you can tell that someone who continues growing, the company will only grow as far as the founders grow.
Sure.
Yeah.
Sure. You are again coming in very early stage. This is the stage where you meet a lot of founders who are first-time founders, right? Who are building companies for the first time.
Yeah.
Multiple founders. Have you witnessed founder conflicts?
Oh yeah, a lot.
Okay.
A lot.
I want you to give us an idea. Again, for this, please don't take names. Although you have not taken a single name so far, I will hold you to that, was. But in this one, don't take names. But let's just talk about founder conflicts. In your opinion, what leads to them? Founder conflicts. What are the red flags which you see when you are, let's say, interviewing founders for the first time? Red flags which give you a heads up that there might be conflicts, for example. I'm just questioning from top of my mind. But purely from a founder conflicts perspective, just give us an idea of what, how, why, and the impact.
Right. This is actually back in when I first started meeting founders, I actually thought having aggressive founders are good. Both, let's say I made a founding team of 2 or 3 co-founders, and all of them were aggressive, were trying to cut each other. In the early days, I thought that was a good sign. But again, it's only later on that I again see Ed and James, and then see other successful founding teams. I think the successful ones are able to respect each other in the sense that they don't cut each other off. when they speak to investors. I think that's the first sign. The one sort of pullback, one sort of push.
Correct.
You can't have both wanting the spotlight. You can't have both wanting to be the front face of the company. Then who's going to run the business?
Correct.
You can't have just like, as I mentioned just now, can't have both. In my opinion, be able to pitch perfectly, right? Like if both founders are too pitch perfect,
something's wrong.
I wouldn't say
reversed. It's too reversed,
right?
Too reversed.
First, am I getting? Look, when you're investing to somebody, it's sort of a marriage.
It's very personal, yeah. Especially at this stage.
Yeah,
It's very personal because you don't have any data. There's not much data.
data.
Minimum data. There's not much data. Especially if someone is a first-time founder, so you don't really have any background as such. It's very limited background in terms of education, what jobs they have done.
Yeah.
So yeah, it's. I think I agree. It's a very personal thing, right?
It's a very personal thing, and of course, like founder conflicts, the ego, and all that.
Correct.
You can tell
Correct.
somebody just wants to have it all, right?
Sure.
And then, of course, looking at the cap table, that's also another.
Yeah, let's talk about cap table. Yeah. Okay, you wanna complete this loop about founder conflicts?
Oh,
Anything else you want to add?
no, go for it. No.
Anything else you want to add? No.
No, just the cap table thing. Let's say if you are, to be honest, a lot of the companies have cap tables of co-founders that are equally divided.
Okay.
But you really ask yourself, like, is everyone equally divided
In terms of
roles in the company?
okay.
I think that-
What ideally do you think should be a cap table, like initial cap table between the founders? Should it be based on how much investment they are putting in, or should it be based on how much responsibility one is willing to take?
I think it comes from responsibility, right? There might be cases where the co-founders are supposed to be equal, but then for the most part, I think the more successful founders tend to be self-aware.
Correct.
And when you're self-aware of your partner's capability, of your capability, that's what makes a great founding team.
Sure.
And in terms of like time span, commitment, and the humility to know that you cannot do it alone, I think those kind of things can be seen from the cap table, how they structure it.
Yeah.
Also as investors, right? Back to being investors, the right investors or not. If an investor want to take a large chunk of your business from the get-go, even for, let's say, pre-seed, 5 million round, 15 money post. That's 30% of your business.
Correct.
One round.
It just gone out there. Doesn't make sense.
Doesn't make sense.
Yeah.
Would you not rather take 1 million for a 5 post or 6 posts? That's 15 to 20%. That 10% is going to be a lot of difference.
Correct. In the long run.
In the long run.
Absolutely. No, absolutely. Okay. Okay, I was just speaking to one of the founders recently. Jan, I was speaking to Jan from Basket. Okay, and we recorded a podcast last week. It was a good, fun podcast. And I asked him that, did you get questions and he's just raised a seed, right? I'm like, did you get questions about your co-founder being your wife? Right? Because it's two of them right now, co-founder being his wife. And he's like, yeah, I did. And I'm like, look, I can understand to some extent that some of the investors might be worried that, look, it's just two of you and it's a marriage. You know how the graph for marriages can be very fickle.
Yeah.
And that might impact the company directly. And he's like, that's a valid question. But then again, it can happen to me with anyone, not only with my wife. It can happen to me with, let's say, if I had a male co-founder, or if I had anyone else whom I'm not related to as well. In your experience, have you seen anything of this sort? Like, for example, if, let's say, the founders are in relationship, the conflicts arise, or yes or no. I mean, I'm just talking very, trying to generalize it, but in anything in your experience, you've seen something like this?
You mean when the founders
Are in a relationship?
Well, we actually invested in one where the founders had a relationship, and they actually gave me a pretty good justification for it as well.
Sure.
Then no, to your question, we have not, luckily we have not encountered investing in a couple whereby they actually got into conflict.
Sure.
But again, this couple actually mentioned that my partner understands me better than anyone else in the world. We've been together for a decade or more.
I know them well.
I know them well.
Yeah.
I mean, same argument as what Jan gave, right?
Yeah.
If I'm gonna argue with my partner, then I might argue with anyone else, might get a conflict with anyone.
Absolutely.
And it's still gonna stink. So
no, I actually, I'm aware of which couple you're talking about.
Yes.
Again, no names, but yeah, I'm aware of them, and I absolutely agree.
Yeah.
I absolutely agree. I know both of them personally, and I mean, if they can fight, then they would fight with anyone.
Yeah.
Right. So it doesn't really matter.
They were in a tough industry, right?
Correct. Very aggressive industry at that point.
Yeah. And they could have fight. They could have fought. It was very easy for them to fight.
Yeah.
I mean, at the end of the day, today they're still partners.
Yes.
Which proved their point, right?
Correct.
Yeah.
Absolutely. Okay. Good one. Talking about cap tables.
Yeah.
Right. So, especially when the startups are very young, they tend to raise money from their friends, from their family members, and then probably somewhere a seed fund like yours comes into play when they've gained certain traction. Right. The angels which help them, the founders, they might be helping them with, let's say, engineering support or analytics support or marketing support in some cases. Like in our case, we have angels who are hands-on.
Yeah.
Right. I mean, they're very helpful, very hands-on. Where do you see Kinangan as a fund be standing in with the founders in terms of support? Right? What kind of support do you offer? There are some funds which I know of, they're very clear that here's the money, especially pre-seed seed funds. Here's the money, send us the report. Right? And then there are some funds which are very active in terms of their support. Where do you stand?
Well, actually for us, it's more of whenever the founders need us, and we are more their friends than their institutional investors, because our check size is obviously smaller, only 50 to 300, and we don't take more than 10% equity most of the time.
Yeah, and then the check is still pretty big for that stage.
Yeah, but I think at that stage, if you institutionalize everything, you sort of formalize everything too much, and the relation, that means there's a barrier in the relationship.
Correct.
Then the founders will not be as open to express themselves, experiment new things.
Correct.
Because there's that fear, right?
Absolutely.
And then there's the pressure. So we try not to pressure any founders who have invested in. We just try to be helpful when...
How are you helpful?
How am I helpful?
Yeah.
Other than introductions and to obviously our LP base and to our network.
Sure.
And obviously I guess my partners being the founders of Kopi Kenangan, they're able to actually share the learnings, right, of the early days.
Correct.
And what to do, what not to do, the pitfalls to avoid. Obviously, everything doesn't fit in a box,
of course,
but at least these guys, my partners have gone through it, right, from a startup perspective. And I guess for me, I have traditional businesses. Most of it have failed. so
I like that.
so I mean, I can tell them it's an early stage company.
I'm sorry, I should not be laughing at this.
I mean, I can. Being a failed businessman allows me to tell them not to be.
Yeah, absolutely. Okay, so let me break this answer down in two parts. First part is the introductions, right? Apart from the introductions, as you mentioned, I believe that's a very important one. A lot of people don't value the worth of network and introductions, but it is immensely invaluable, especially for an early stage founder.
Yeah.
The ease of access to, let's say, another founder or talent or whatever, it's immensely helpful. It saves a lot of time and saves a lot of mistakes.
Yeah.
Right? You make lesser mistakes because you can learn from someone else's mistakes. That is number one. Absolutely, I believe that is that. And you have a pretty large thanks to your LPs as well as other founders in the network. The network has become pretty larger. And of course, then you have Kenangan founders who have sort of done it.
Yes, exactly, right?
Yeah.
But then at the same time, I believe that just like you mentioned hiring, I think we don't do that unless the founder requests.
Yeah,
sure. I think a lot of the day-to-day stuff, right? If we get too meddlesome, first, the founders have to create the company culture.
Correct.
After that, the founders has to be the guy that is making the decision at the end of the day. It shouldn't be the investor. For us, it's very important that we become a founder-friendly investor, at least from an operational standpoint.
Mm-hmm.
We will give feedbacks, but we will never force a founder to do something. Even if the founder want to take, for example, let's say they have a 200K cash in bank, they want to take a 20K monthly salary. Obviously, that's not good. We will tell you it's not good.
Of course.
But at the end of the day,
it's your company.
It's your company, right? If that's how you really want to run it, I guess.
Has this happened?
No, this have not happened. But what I'm trying to say is for the good and the bad.
Of course.
We let the founders make the decision.
Sure.
Because at the end of the day, if I make too much of the decision, I'll be a founder.
Yeah, exactly. No, absolutely true. Okay, so you guys have made close to 30 plus investments so far. It's been already 3 years now.
Yeah.
Right. I'm sure there must be a few who don't exist anymore, who have, or everyone's out there in business.
Actually, only one is no longer doesn't exist anymore.
Okay.
The others are still in business.
Oh, that's a pretty good one, yeah.
Yeah.
In 3 years. Okay. Oh, but this also includes a super high bull market of 2021 and early 2022 of investments.
Yes.
Okay, let's talk about that. So we saw a massive influx of money.
Yeah.
Practically a lot of wealth redistribution.
Yeah.
Money coming from large venture capitals and going out in discounts, offers, or whatever. But now, for the last 1 year or so, there seems to be sort of a calmness.
Yep.
Sort of basic sense prevailed in terms of the way operations are being managed.
Yep.
How does this impact someone who's starting his entrepreneurial journey today?
It's actually great, right? It's actually an opportunity as well for investors. I feel that means you're going to get entrepreneurs who actually is in it to build something and to change something, to make a change. during the bull market, we see a lot of founders who are in it to get a high valuation,
Sure.
to optimize valuation from day one. I think I'm seeing that less and less today, because at the end of the day, the reason why you want to fundraise is to expedite your growth.
Correct.
It's not supposed to actually be your number one business, fundraising.
Correct.
If you can actually grow into $1 billion company in 5 years, then why will you take VC money?
Correct.
The only reason why you take investors' money is because you cannot grow that fast. That's why investors are investing at a bit of a premium,
Mm-hmm.
and then you can sort of build into the valuation in a few months or in a year,
Sure.
not in 5 to 10 years.
Okay. Let me ask you something which I have been reading. I'm not an expert at this. I've been reading, so I'll let you decide the authenticity of it, and then probably if it is authentic, you can respond to it. So what I've been reading is that there are a lot of companies which basically pulled large sums of money at insane valuations, like massive multiples, compared to the revenue, or in some cases compared to just the growth, right? Not even revenue, massive multiples. And now they are running out of money. They have to raise more, but they cannot because the valuations don't fit in anywhere box. And in a lot of cases, they're just being told that, hey, listen, you are basically not investable anymore, right? How does one avoid falling into this trap? How does one avoid, as a founder who's starting today, as a founder who's raising money from you today, how can one avoid falling in this trap?
I see. Good question. For us, it's about optimizing valuation, right? Like I mentioned, how many companies, in 2020, 2021, you see a lot of pre-seed companies raising double-digit valuation.
Yeah.
Get cool.
Yeah. In stealth mode.
Exactly. Can you, do you not realize that some public companies in Indonesia has the same valuation as...
Correct. Absolutely.
So
Absolutely.
that's obviously, for me, at the end of the day, the pressure will be on you to live up to that valuation, to raise a bigger round, because investors need returns too.
Sure.
And at the end of the day, because they have invested in you, you'll be the one as a founder that gets the bulk of the pressure.
Sure.
Investors get pressure from LP, they throw it back to you. And what happens to the company then? Then the company will not have the right intentions anymore.
Sure.
They will not be building the fundamentals. They will be chasing metrics.
Sure.
I think in 2020, 2021, the metrics of the day was gross merchandise value, right?
Yeah, it's super funny.
But suddenly today, the investment thesis of a lot of investors have changed. When you talk about GMV, they immediately switched off.
Yeah.
But as investors who were chasing metrics back in the day, that's all you know.
Correct.
You never learn how to build a fundamental business.
Correct.
So that's again why I'm lucky that obviously I have the guidance of Edward and James, who have built what is, I think, a fundamentally solid business, to see that and compare it with some others that actually focuses more on pure vanity metrics, I would say.
Sure.
Yeah.
Sure. Absolutely. So, very fair. Very fair. Let's give our audience a breakdown of how a early stage venture fund works.
Yeah.
Right. So, in your first, let's call it your first fund, which you have from where you have invested in, let's say, or 30 startups, which was predominantly your own personal money, right?
Yeah.
You, James, Edward, and the other. How many? 9 of you.
I think it was 9 of us. Yeah.
9 of you, right? So basically, these 9 become the lending partners. Would it be right to say, in terminology?
Lending partners, how we become I guess we become, I guess we're the investors.
You're the investor.
Yeah.
Okay. Now, we were speaking just before we start the podcast that you are closing another round.
Yeah.
I think by the time the podcast goes live, you would have already completed it.
Yeah.
How does this happen now? So you're closing another round of fund, and this time you are pulling in money from other funds and individuals.
We're pulling in money from external investors.
Okay.
So for the first fund, as all affiliated party, right, is basically a family and friends.
Sure.
Pulling a very small capital together to invest in early stage companies. It was very informalized.
Yeah.
There were no formalized investment committee.
Sure. But it's just more of friends. Like, hey, I am putting in money. You want to put?
Yes,
it's like that. Yeah.
Well, let's put it together.
Yeah.
But then for the second fund, for our first external fund, it's actually more formalized, where we have investment committee of 4 of us.
Sure.
And I think the investors, as I mentioned, was like regional and global funds, make up a large chunk of that, and some local family offices.
Okay.
For sure.
Okay. You have quite a few entrepreneurs also, right? As a part of your investors in your fund?
Yeah, we do.
You do, right?
We do.
You do. Okay.
We do.
Okay.
So obviously those entrepreneurs will add some, those ex-founders and exec from some of the leading internet companies will actually help in terms of
strategic value,
guiding the founders.
Sure.
If they want to connect to these, more established founders, then obviously they can do that. Yeah.
Sure. And how does the returns work for this early stage of fund, right? Because from, again, not an expert.
Yeah.
From what I've read, heard, and whatever I've discussed with other venture capitals, I believe for the larger funds, the return cycles are 10 years and 12 years and more.
Yeah.
But for a early stage fund like yours, what kind of return, how does the return cycle work? I mean, only if you're comfortable sharing.
I mean, the typical fund life is the same among, I think, most funds is the 10 years.
10 years.
And deployment period is typically 3 to 5 years.
Okay.
And so the reason why deployment period is 3 to 5 years, because you don't want to be too over concentrated in terms of investing in the same year, because it's impossible for that many companies to be that good.
Correct. In 1 year. True.
It's just humanly impossible.
Sure.
So, and then in terms of the return, I can't say what kind of return we'll get from the second one. Hopefully we'll return.
That's your word.
Yeah, knock on wood.
Yeah.
I'll try my best to do that. But for the first one, at least, we're able to return our capital pretty early on. We're able to make some exits.
Okay.
We had 4 partial exits and 3 full exits.
Nice.
We're able to return the fund within 1.5 years. Fun.
Yeah.
But
Sure.
yes, we're able to get a 1.6x DPI.
It's pretty good.
Yeah, it was okay. And I think, as you mentioned earlier, it was a combination of a lot of factors.
Yeah.
All of which luck and bull market being in the center of it.
True.
But then on another hand, why we have the confidence to actually raise an external fund is because our fund size again is so small, our thesis remain the same, valuations have come down a lot.
Sure.
And obviously the Kenangan founders, James being my partner for this fund, I think gives me a lot of confidence.
True.
And I think another member that I have not talked about is Christian. Christian is, I think, one of the, if not the best angel investor for me.
Okay.
In the region.
Okay.
He was the first angel in Kenangan. He was the first angel in many other companies.
What's his background? Christian's background?
Christian was actually founded several companies himself.
Okay.
And he was at Mount Hill for a bit. He was an investor. He was a founder.
Nice.
And he has been in the ecosystem since 2013.
Sure. So he's seen the cycles.
He have seen it. He have lived it. and I think he's the definition of he's the industry. So those guys, obviously, having those guys my partners, so I learned a lot of things from those guys.
Sure. Okay, so you are actually very new to all this. It's been 3 years now, right? Sort of.
Yeah.
How old are you?
How old am I? I'm quite old.
Come on, give us something.
30 this year.
You're 30.
Yeah,
Right.
this
So
year.
you started this at 27.
27 going to 8, yeah.
27 going to 28. Why dedicate yourself full time into doing something like this? It's very exciting, trust me. I mean, I am very sure, but so volatile as well, right? It's so volatile. Second, it involves large amounts of money.
Yeah.
And with money comes a responsibility, liability,
For sure.
and a lot of sleepless nights.
For sure.
Right. I mean, we are raising our round, and I start palpitating. I'm like, okay, so much of the stress is not about anything else, but the fact that, hey, listen, our investors deserve a return, right? They are putting in their hard-earned money in us. We need to ensure that they get a good exit gradually, right? It's the same pressure on you as well. Right? Because although they are friends, but it's money, right? And now it's an external fund as well,
For sure.
right? What led you to do this apart from James and Edward? I mean, of course they wanted to do this, but you jumped full time into doing this. This is what you do right now.
Yes.
Okay, and you do it very well, as what I've heard, because I speak to many founders, early stage founders, and they're always like, hey, listen, Bipin, I can connect you with Fandy. I'm like, bro, I'm connected. So everyone keeps telling me this, right? So which means that you're doing a great job for sure. Look, if people are talking amongst each other that let me connect you with Kinangan, let me connect you with Fandy, that means that you're approachable. Second, you give them that feedback, good or bad, whatever. Right. And third, that you are available for this.
Right.
So, I mean, now in hindsight, it's been 3 years. What do you think? Why you are still in this? What keeps you going?
What keeps me going? It doesn't feel like, for the most part, it doesn't
feel like work.
Unless we're talking about administrative stuff.
Okay.
I like meeting people. So especially speaking to people one-on-one has become sort of a passion for me.
Sure. Has it always been, or it is a newfound passion?
I've always liked to learn about people. I was actually a psychology major. I have always loved, ever since I was a teenager, I have always loved to see what is the intention of people, what drive people, what drive them to succeed, what drive them over the edge, what drive them to fail, what drive them to do certain things. Is it their ego? Is it their need? And if you look at the portfolio company, the founders that I've invested in a lot of sector experts. I've invested in people that has to do this and have to do this, go all in or nothing.
Sure.
And basically that goes back to my point, right? The intentions, what drive them. I have not invested, I hope for the most part, I've not invested in people who don't need to find a startup to make a living. So again, I've always liked that part about investing, but especially pre-seed investing, and where the financial modeling is still quite simple. It's still quite basic. I'm not in a PE where I have to do M&As, and I have to sort of financially engineer.
Too crazy.
A lot of, that's not for me. I don't find any passion in that.
Sure.
I find passion in speaking to people.
Sure.
And also, again, failed businessman.
Right.
multiple failed businesses under my belt. I want to see.
Nothing teaches as good as failures.
I hope I learned something.
Yeah, I'm sure.
But I hope the one thing is that I hope one or a few of the founders that I bring to the table for us to invest in, I hope that they achieve what I never achieved.
True.
They get to the same level that Ed and James are at right now and bigger. That will really be the ultimate satisfaction for me.
Sure.
So yeah, that's what drives me.
Interesting. How do you stay so calm here?
How do I stay so calm?
Yeah, I mean, you have a very calm demeanor. I mean, you have this very calming energy. I don't know how. I mean, I don't know how else to describe it. Do you meditate or anything like that?
Oh no, I don't really meditate.
Okay.
I'm actually not very calm person. A lot of thoughts running through my mind.
Internally, okay.
Yeah.
But the exterior is very calm.
Because I think in any situation, I try to be calm, but in any situation, I believe the calmest, the most patient wins.
No, that is absolutely true. Absolutely true. I mean, you come across as someone who's very calm. Maybe as you said that you try to be calm, so you're probably forcing your body to be calm, but thoughts are like out there. Maybe, I don't know.
Yes.
But yeah. Okay. Anything which you feel that we did not cover in this conversation?
Yes. Just want to say that, yeah, as you know, we're an angel fund. We're not affiliated to Kopi Kenangan. We're not the CBC of Kopi Kenangan. I think a lot of people
get confused about this.
That we're a CBC of Kenangan.
We will put that in the disclaimer also.
Yes. You can actually put me as Kopital Ventures.
Sure.
Yeah.
How do people reach you? How can founders reach you?
They can reach me via email at fundy@kopitalventures.com.
Okay.
Or they can reach out to me on LinkedIn. And yeah, so obviously we try to be helpful, but when we invest in you, we cannot guarantee you anything, to be honest.
Sure.
That obviously the capital that we promise, that's why we want to make sure the message is clear between.
No, absolutely.
Yeah, that we cannot guarantee any kind of collaboration with Kopi Kenangan. We cannot guarantee any kind of collaboration with any other founders.
He's being very clear.
Yes, but obviously when it's a mutually beneficial or like invested by any of our LPs, where
sure. Right. I mean, if there is an opportunity, I think they will collaborate. Either ways.
Exactly. So at the end of the day, I think the most important thing for people like watching this and future founders that I invest in is we can open the door.
Sure.
But we need you to close it.
Absolutely.
Yeah.
Absolutely. This was fabulous. Thank you so much for doing this, Fandy.
Yeah.
You did not take name of a single startup which you guys have invested in.
Yeah.
Very smartly dodged the questions around that. But I have to give it to you. This was really, really good. I think we had so many insights. I'm pretty sure a lot of questions which folks have who are starting up now must be clarified. Thank you so much for doing this once again.
Thank you for having me.
Thank you.
Appreciate it.
Thank you.